Oh my days, what an absolute wild show it has been, ladies and gentlemen. Like, we're back 5 minutes and the whole market is just saying nope. But the problem is real. Okay, listen, commodities are up, gold, oil, silver moving higher. Investors are trying to diversify and prepare themselves for what could be the biggest problem that we've got in the marketplace, the disconnect with the actual market and, of course, the economy. More importantly, the yields are flying. I mean, I've got to pay attention because I'm currently running shorts on crypto and it's getting a little bit interesting. But I'm just gonna pull that up right now because I can't focus. By the way, do you like the hair? That was the best ever. Go into the Discord. There was a kudo board. Mad love for Mike doing that. It's just, just give me all the birthday wishes. So mad love to all the birthday wishes that are coming out to me. Yes, I'm 40 years of age. I used to have hair, now I don't. But anyways, thank you so much, everybody. But gotta get back into it all, man. We're here. We're in shorts right now on crypto. So we're running shorts on Bitcoin, shorts on Ethereum. So far, we're sat on a 15K win. And it's getting very, very tricky right now, guys. And the concerning thing that I have is this. The market is just taking a bleed. But the problem is, well, the good thing is this is a red vector candle. And when you see a red vector candle, price tends to make a little bit of a reversal. But you know what? I want to pay attention to you guys because usually what happens is they reverse it and I just leave money on the table. So good night. I'm closing that trade. I don't care what it does after that. Close that trade. Happy days, and then close that trade. Happy days. That's how we do it. All right. I'm not interested. And last night was a pretty decent night as well. It was a tricky night because I was in a drawdown. But let me just bring that up for you right now. So there was last night's wins with that retrace. If I showed that video that I showed you guys last night, we were talking about the clue where the top short leverage traders were in. I traded that logic, and that was the principle right there. So if we... Right, look, this is what I was using. This is the returns and what have you. Okay, cool. Then we've established that. Sol did really great. But if I just show you the actual entries, okay, I was long on this range right here on that principle from last night. If you haven't watched that video, go and watch it, talking about the clue. And then we managed to make the close of the short up, the long to the upside because they had made the short squeeze to the upside because of how many short leverage traders there were. And then, of course, they've now made the move down. I've exited the trade because they've come back into the vector recovery. I'll be giving money away if I stayed in the trade. That's the thing. I don't care what it can do after that. Walk away with the profit. Done. Now, I can effectively try and trade the retrace, but the bigger picture is the problem. Let me explain. The stock market is getting smacked. Historically, bonds usually have this problem around this time, but you know why? I'm going to ask you guys, why do you think the dollar dominance is shooting up right now? Let me just put it into perspective. All right. Where's the dollar right now? Look at that beautiful thing. Zero purchasing power and it's just pumping. Why do you think the dollar is moving up right now? And it's something really simple. Okay. Why are the yields going up? Why is gold, oil, silver all moving up? Surely gold against the US dollar means that when dollar goes up, gold goes down. What's going on? There are two things that are coming into play. If anyone can work it out, thank you very much. Thank you. Thank you. If anyone can work it out, then, happy days to you. All right. They're selling stocks and going into the dollar, baby. That's correct. But why do you think they're selling stocks? Why do you think they're getting out of it? And it's really, really simple. But you probably won't even get it because it will never come to mind because we always try and make ourselves believe that we have to really think of things really deeply. No, we don't. What is it? Preparing for the thing? Where's the wig? There is no wig. Tariffs, wars, about another million reasons. No, it's simpler than that. Tax. We're coming into the end of a corporate element where tax returns need to be given. Corporate taxes need to start coming into play or refinancing. So what do they need to do? They need to offload their risk. They need to get out of any exposure that they have, start accumulating the good old dollars and start paying up Uncle Sam. So that's exactly what's going on. That explains why the 2-year yield is shooting up. The 5-year and the 10-year is shooting up. The 30-year getting close to that 5. It actually nearly tapped it, nearly 5% right there. Do you understand how many investors would snap that up? Okay. So 30-year, got hit on the 30-year yield, 5%. This is clear as day a problem for the market because it's telling us investors are no longer interested in US bonds. Where's the bonds? Bonds are taking a smackaroo to the downside. All right. However, there's something brewing today. Trump is going to make an announcement. What is that announcement? It's going to be at 2 p.m. Eastern Standard, 7 p.m. UK time. What is he going to be talking about? We don't know. It could be a number of things. Pharmaceutical tariffs, that's just going to wind everybody up, okay? Is he going to be doing anything in regards to the deal with China? Is he going to make an announcement about interest rates? Because apparently inflation is out the window. No, let's actually work that out. In the next hour, yes, in the next hour, 50 minutes, the ISM PMI, man, my bearings of time were wild then. The next 50 minutes, the ISM PMI will be released. Now, if we go back to Monday's video, we talked about the ISM and, of course, the money purchase, the M2 money supply, because everyone is fixated. The M2 money supply is going up. Bitcoin's going to be going up. It's potential purchasing power. It's not the real power. It's not the real money. Okay? That's really important. And the ISM in itself is going to give you an understanding of where we are. We've been contracting non-stop on the purchasing index, right? The ISM has been contracting since 2021. One of the guys in the Discord highlighted it, said, but we've been contracting. How can we see expansion, right? Yeah, it makes sense. But the ISM manufacturing PMI is contracting. So let me just do this right now. Hold on a second. Here we go. So you can see this dark line here. Since 2021, it has just been going down and down and down around the same time that the dollar dominance started to peak out and start going lower and lower and lower. Okay? The M2 money supply is starting to move up, but it's not really moving up. Okay? This is the US real M2 money supply. All right? The real purchasing power is not really doing anything. And the ISM tells you if there is purchasing happening across the board. The reading that's coming out today is being projected at 49. A reading below 50 is contraction. A reading above 50 is expansionary. If this reading comes in today at 49, then that's okay, but it's not, because it's still in a contractionary phase. That justifies the idea of interest rates being cut. Why? M2 money supply, potential purchasing power. ISM purchasing index tells you if they are actually putting money to work in the manufacturing sector. What are they doing? They're going out to China. They're going to Japan. They're going to Australia. Are they buying things? If they're not buying anything, then that means the purchasing index itself should come in at a contraction. It should come in lower because the economy ain't really representing this good economy. The GDP's gone up 3.3% with the projection from 3% in last month's reading. Wait a second. How are you going up? Your deficit's flying. So for every dollar the US earns, it owes 124%, sorry. What kind of economy is that? Yeah, I guess, businesses and you earn money and wealth is created on the back of debt, but that's the business model. But there's going to be a time where it hits a peak, and that peak is coming into play. Yields are moving up. Bonds are taking a nosedive. The volatility index is making a nice climberoo to the upside. When it starts moving up, this is when you start shorting. That was my narrative for me to run shorts today on Bitcoin. Okay, that's why we took the short. Now, secondly, you've got the NASDAQ taking a smack to the downside, getting ready to break a key area of 23,000. Unbelievable. What if NASDAQ does drop out? Well, ladies and gentlemen, your Nvidia is going to be cheaper. All your other stocks that have been sailing all-time highs are going to be cheaper. This, for me, is the Fed pivot preparation. Put it into perspective. You go over to this right here. What do you see? There's a 91% chance that they're going to cut the interest rates. That is what's going to be fueling the idea of gold's price to keep on moving up. Here we go. Gold making a nice climb to the upside. Your all-time high has been taken, ladies and gentlemen. Gold works inversely to the interest rates. When the interest rates get cut, gold's price goes up because investors want to generate a yield. But the problem we've got is this, that investors are no longer seeking demand for US bonds, which is forcing the yields to go higher. So that means that the expectation of interest rates in the future is higher. That means if any data comes out for us this week, it could really nip it in the bud for us and cause a big problem. for the interest rates. Remember, this reading last week was at 70. It went from 92 after the Jackson Hole Symposium. Then it went down to 70 because we had a bit of data come out suggesting that maybe we are going to have a problem with inflation. Well, we've got more data coming out. We've got the JOLTS job openings report coming out tomorrow. If that comes in and shows that there is genuinely jobs available, then the Federal Reserve hasn't got to worry about the labor market. It doesn't need to cut the rates because the market is absorbing the high interest rates and the fact that inflation is still sticky. But they don't care about inflation anymore. They only care about the jobs market. So the jobs data coming in at 7.39 million, if it comes in anything above that, everyone's going to be happy at the Federal Reserve. Donald Trump won't be because we won't be getting the rate cut. That would then equally lead to the bets on the FOMC cutting the rates to come down. If that comes down, that, ladies and gentlemen, will then mean that investors are then going to go back to the plan, which is what? Prices will still keep going up. Prices will keep on going up, ladies and gentlemen, if they do not cut the interest rates. You ask me why? Because we're not having to change the way we're doing business. We're not changing in the cost of doing business, all right? When you cut the rates, that means you then need to start taking yourself out of other asset classes and going into other asset classes. That's why historically a Fed pivot always leads to a market correcting, because investors are having to transition and move away from certain asset classes. Like I said, right now, companies or US corporate America are getting refinanced on specific debt, and they've also got taxes to pay. That's why they're all going over into the dollar right now. That's going to lead dollar strength to keep on marking up. But don't worry, from now up until the FOMC, I do believe that the dollar dominance is going to come into play, because logic says that when you cut interest rates on any dollar native currency, you're losing yield. That's why gold's going up. That's why the Nasdaq's going down, because investors are starting to wet themselves. Look, silver. Let's go over and look at silver. Where is it? Oil. Oil made a nice pump to the upside. Investors are concerned. Quickly going over into... Where is she? I need to sort this out, man. I can't seem to find... Every time I flick this thing... There we go. Right, silver. Look at that. $40. I gave you guys the price projection of $50 on silver. We are not far from that. And the further silver price goes, the more banks are getting concerned about the way things are operating. And it's not looking good when Trump's worried about that $9.5 trillion that needs to get refinanced. And those corporate debt loans, they're not looking good. The BB. Here's something for you. There was a video that I did in the live stream in when I was in Cyprus. And it was talking about how much debt is made up of certain assets, right? And the current rating of the debt, or for the unrealized banks' losses and earnings and gains, how much of it is debt, how much of it isn't, right? And it's all BBB graded, which means that if there's not that much risk with it. But if there are any economic problems, then it is prone to massive risk. And that BBB rating of that corporate debt is made up of tech stocks. So if the yields are going up, that's going to be a massive problem for the tech market. I think everything's on discount. That's what I think. Everything is on discount. I mean, look, we've got strategy buying up Bitcoin. 444, ladies and gentlemen, $444 million worth of Bitcoin purchased again. Fire sale. That's all it is. Okay, just be happy for it. It's quickly going into the order flow and have a look. So Bitcoin took a little bit of tumble to the downside. We made some money, happy days, but now we're starting to see Bitcoin consolidate. This is the key level you need to be paying attention to. Go over to the daily time frame. This is for my holders, all right? You can see that Bitcoin is being very treacherous with its behavior. Spike up, down, spike up, down. Now, what is it? It's order flow, okay? What's going on is this. The bids are coming into play and they're offering out, and then they reset it again by coming down. The bids are coming into play, they offer out, and then they reset it again. The bids are coming into play, they offer out, and then they reset it again. The next logical spot for Bitcoin could be, in my opinion, if things break down and Donald Trump makes a problem of the marketplace, will be 101,000. That is a problem. But is it? How many of you will welcome 101,000 Bitcoin? Come on. And it's my birthday today. I would like 1,000 likes in the live. It doesn't cost you anything. You guys are lazy today. Tina, why did you cut your hair? I just couldn't be bothered with it. You know, turn into Spock again. Shorting odds is so easy. Yeah, I'm 23 years of age. The US just now removed Taiwan's waiver to allow chip shipments to China. Yeah, because they know that their economy is based on the semiconductor index. That's the truth. The semiconductor index is the US's economy. Simple as. Simple. Just bring it up for you now. Taiwan. I don't even spell it. Here we go. Watch this. So, semiconductor industry, revenues. Click this. Okay. So look at the industry itself. It is wild, all right? It's just expanding, and it pays them to make sure that this operates, because without it, the US is done. Sorry, it's true. The US is completely done with it all. But let me explain to you this level. The last consolidation that Bitcoin had inside of its all-time high was this range right here. We are sat in that range right now. This is the vector candle block. If the market's memory does get triggered yet again, then the ideal is that when it moved up towards this point, it grabbed people's attention. It was a trap. But then they repeated it over here, and then they made an all-time high. You're looking for the same behavior here. That's what you're looking for. So 106 and 109 is really the sweet spot for cryptocurrency, okay? But of course, we've got a number of aspects coming into play that could lead the market to correct, to only come back up. And I'm telling you, if the market sees that interest rates are not going to get cut, gold's price will drop, because investors are coming out of the stock market, going into gold because they need a safe haven, because everything is changing in terms of monetary policy, or the dovish cycle, easing cycle, right? Do you understand what that means? Lately, we've been getting tight with the amount of money that's being released. Okay, your M2 money supply and all of that stuff, right, it's gone now. But your M2 money supply, yeah, it's going up, but it's purchasing power, but your dollar is dead. So how many of you have been asking yourself, hold on, is the M2 money supply really representing what Bitcoin is doing? It's not really, is it? Because your dollars are down, so you have no purchasing power. So that is forcing investors to have to buy more or pay more in terms of value of Bitcoin because their dollars are weak. That's the problem. If your dollar was strong, then the M2 money supply would be valid. Bitcoin would be following that and it would be exploding, but it's not, because the potential's there, but they're not putting it to work. And the ISM today is going to make us be aware if that is a problem, and that is going to be a problem in the near future. I hope that makes sense. Thank you, man. It has been a hard market. Liquidity is a problem. I'm 40, man. You learned more this year than you could at uni. That's awesome, bro. That is awesome. Don't knock uni, though, man. At uni, I understood how to become resourceful, how to research. You know, I didn't care about what Tesco did with information on my credit card and storing it into data houses, and then how they extract that from knowledge to information to then create products. You know, it trips me out when I walk into Sainsbury's or Tesco and I'm like, I had that last week. Why is it there in my face? How do they know I like that? You know, it's Minority Report. If you those who know, who know. Silver is at 14-year high. This is correct. Tina out here on the birthday, still trying to help everyone. Give the stream a like. You know what? I will always do streams. It doesn't stop me. I will always do streams. When I'm here in the UK, I will always do streams. Birthday, Christmas, you name it, I'm there. You know, I don't care. Anyways, let's quickly go and have a look at other assets across the board. ETH. Altcoin season's in the bin. Sorry. It is. It really is. Dominance is starting to climb. It's getting ready. It really is. Just go over to the actual ETF. And look, I hate it when people are like, oh, why you say that? Oh, yeah, I've got loads of altcoins. You'll welcome altcoin dominance as the same way you'll welcome Bitcoin dominance, okay? If you really want to hedge yourself, get out of your alts, get into Bitcoin, and reverse, vice versa, whatever, okay? As it stands, the Bitcoin ETF is at 746,000. Okay, so we're not really expanding, but these levels right here are critically important. These are your liquidations, okay, Delta. Right here are short liquidations, okay? But price has already gone beyond that. People are positioning themselves for shorts from this range. That's why I say to you, with Bitcoin, okay, This level right here is critical because it's going to give people the illusion that it's going to come down. It can come down and it will come down. It will do a nice little sweep and that'll be fine, ladies and gentlemen. Come on, don't complain about Bitcoin coming to 100,000. You took 124,000. Everyone is adamant that this is the top. This is it. There's no more Bitcoin. No, it's not. This is going to come back. Price is going to hit back the all-time high. It really will. They've left that vector behind. How much time they spend to get to that is all going to be all based on cyclical behavior of the marketplace. Expansion, contraction, expansion, contraction. If we look at every time Bitcoin corrects from its highs, you can take the high from there and we go down to here, 31% correction. All right. We then go over to here. Do we see the same thing? Take the high to current price point. You got yourself a 13% correction. So you really have to give yourself leeway to believe that Bitcoin could effectively come all the way down here. And that would be a healthy correction. It really would. And you'll then see Bitcoin come and recover. This vector candle down here at 87 and that 91,000 range. Then you've got this little vector candle region right here. And then this little zone right here. And of course, this area right here. So you can see this is vector recovery. This for me, ladies and gentlemen, is the last thing that I'm going to be talking about as a reminder for all of you, if you remember the 20-20-20-40 method. Okay, so let me just get into it. Right, so here we go. 20-20-20-40 method is a way for you to expose your capital, working capital, into Bitcoin. Okay, now imagine you've got $10,000. Okay, and you split it 20-20-20-40. That means 20% right there, 20% right there, 20% right there. Okay, that's $2 grand, $2 grand, $2 grand. And what do you think that is? Yep, that's $4 grand right there. Okay, that's 40%. This 40% stays in cash. I'm going to talk about that in a second. When you are in the anticipation that Bitcoin is going to make a move to the downside, but the overall prospect of cryptocurrency is to continue higher, don't forget volatility, don't forget Fed pivot, then you've got to understand the way you can actually work this strategy is by slowly placing DCA bets, okay, at key areas based off the way price moves. In other words, you've seen Bitcoin pull back, and this is a very nice pullback, ladies and gentlemen. It's controlled. It's not horrible. It's not got wild price swings. It's a controlled move. So the way you allocate your risk is you take your 20% and you say to yourself, you know what? I'm going to take this 20%. That's $2 grand. I'm going to load up 20% right there. Then what happens? Bitcoin retraces up and then it comes back down again, hits a key area. You look at price action, you say, okay, it's come back to a vector zone. Where are we in terms of the stock market? Is the market dropped out? Are we going to start seeing price make a recovery? You make that belief. You think, okay, this is a key area for Bitcoin. Super chat, I'll give you the discussion in a second. What is your view on CME gaps? Will the gap at 116 get filled? Bear with me a second. So then you're doing your 20% again right here, okay? Then you then see price coming up again and then it drops again. And then you're like, right, I'm in the expectation and I can factor in the idea that Bitcoin can drop down another zone and then I'm going to load up my 20%. So now you've got $6 grand of your working capital in the chart. Do nothing. Wait to see how far it can go. What if Bitcoin then decides to take a sweep to the downside? And then it aggressively drops. You are currently in a drawdown because of where your investments are, but you still got 40% over here. You then say to yourself, hold on, that is a great thing. That is, it's a nice discount. It's caught everyone's attention. Then what you start seeing Bitcoin doing is making a recovery back up. This is where you plant the 40%. The 40% is aimed at being cash continuously. It has to stay cash, which means you plant the 40% there. Yes, you are heavily margined into the position, right? But you plant the 40% there, price then starts to make a recovery back up. You're making money on the 40%, you close it, you return it back to cash. But now you've got more cash in value on that 40%. Now your profitable position is right here, your first 20%. Then price retraces back down again. And then it starts to continue back up on the premise that we are in a bullish cycle. And then, of course, you then see retraces and you say to yourself, you know what? I'm going to take 10% of the profit of this one right here and I'm going to wait and see what happens. Then price goes up again and then you say, I'm going to add another 10% right here. It depends on how you're going to play it. But that 40% will always have to stay in cash. It always has to be there because what if Bitcoin decides to drop down again and sweep that area? You've now got 40% cash flow that you can use to take advantage of that, and then it returns back up again. You'll then end up finding that the returns that you're making on the 40% in these two levels right here are effectively offsetting the loss that you've got over here. That's the 20-20-40 method. And it's on the premise that you are actually in a bullish market, because DCA is absolutely BS when the markets are correcting, because you are averaging down. It's drop, retrace, buy, drop, retrace, buy, drop, retrace, buy, drop, retrace, buy. Okay, it's going to work when it decides to then come up again and you're only earning after that. Cool. But what happened to all the guys that went long and started DCAing at 69,000? That was a problem for a lot of people, and it dropped all the way down to 15,000. Hell, man, we even wanted to see it go to 8, and it didn't. That's another story. But you can appreciate that when you're doing DCA, the whole point is that you've got to make sure that you are in an assumed bullish market. The only way you can identify that is if money is going to be cheaper in the future, right? Right now, you're going into that transition where they're going to cut the rate, so money needs to be adjusted. Finance needs to get refinanced at different rates now, okay? Once all of that happens, then going into the start of the new quarter of next year, then you're going to start seeing prices starting to appreciate again, because they've had to change the interest rates. And if we do get a scope that the interest rates are going to get cut further and further, that means money is going to get cheaper and cheaper. Isn't it ironic now that the Japanese, they're effectively having a problem with inflation? The euro is now having a problem with inflation. It was up 2.3% today. So that means what? They've been cutting their interest rates non-stop. They're going to have to start increasing their interest rates. When you increase interest rates on the yen, you increase interest rates on the euro, you want to go to the other currency that's having a reduction in interest rates, dollar. So then you're going to then see this swing. Dollar interest rates down, yen and euro interest rates up. Lately, it's just been dollar interest rates high. We're waiting for those cuts. The second we get those cuts, reset across the board, buy it all up, everything starts climbing back up again. Let's go look at the market cycles. Go and look. I'll challenge you, all right? Go to the FOMC, federal funds rate, okay? Just do this as a little exercise for you, all right? Where is it? There you go. Go to Forex Factory, federal funds rate. Click that. Click here. And these are all your federal funds rate, okay? Go and have a look when they pivoted. That means after a period of time, so you got 2.5, 2.5, 2.5, 2.5. Where's the pivot? Bang, down to 2.25%, 2%. Go to September, July 2019, right? When was that? That was your crypto bull run, wasn't it, ladies and gentlemen? Well, the start of it, where money started to get cheaper. Go and study those interest rates because it's all on here. You want to know if they're going to be buying Bitcoin or not? You study that. You study all of this, the dates, when price turns, what's going on macroeconomically speaking. Do we have inflation there? No. Money was dead. Look at that, less than 0.25%. We were offering Japanese yen rates, carry trade rates, ladies and gentlemen, on the US dollar. Will we get there? I think we'll only get there if the market were to aggressively crash. That would then be stimulating economies, all right? With that being said, ladies and gentlemen, mad love and respect. Thank you for my birthday wishes. I've got nothing but love for you all. And I will aim to tune into you all later on. If not, you know that I went to go and sort my hair out. But you know, you do like the thumbnail, don't you? I hope you do. So like on the way out, that's your birthday present to me. Like, subscribe, and I'll be tuning into you all later on. Take care of yourselves, gang. Mad love and respect. Market ain't open, but I've got to make a move. Peace. Actually, wait. No, we're not saying peace. I've just seen something. Sign the birthday card. All right, I'll tell you what I'm going to do tonight. You know what? Screw it. This is what we're going to do tonight, okay? Tonight, we're going to talk a little bit of price action, but we're also going to look at this kudos board. Go sign this board. Go and sign this board, ladies and gentlemen. I would really enjoy it if you guys went and signed this board. Yeah, who is it? Primos, listen, you smashed it, bro. I took your thumbnail. That's the best one right there. Look at that. Brilliant. Yep, that is it. And there we are. It's like, look at this, Mitch. What are you doing, bro? Let's be honest now. Hold on. Like, come on, man. Look, that's what I mean. If I shave, man, I look like a virgin. That is violating. Horrible. But anyways, go fill that in. Mike has pinned it to the top of the chat. So go and take advantage of that. And the gentleman asked the question earlier, what is your view on the CME gaps getting filled at 116 plus? Okay, quickly going over into that. Come on, what's going on here? Here we go. The CME gap at 116. Right. So you're going to drop down to smaller time frames. All right. And the gap that the gentleman is making reference to is right here. I expect it to fill that gap, but there's too many things that are happening right now. Okay. It will be a gap that they see. Just because it's close doesn't mean that they have to see it straight away, but they will be coming back to that gap very, very soon. All right. It's just a case of whether the market decides to roll with it or not. Okay. But just be careful. All right. Wait for them to hold support inside of this range and you'll know exactly where you are with it all. Okay. What the hell? Have I stopped this live stream? Have I stopped it? No, I haven't. Anyways, mad love and respect, guys. Go fill in that kudo board. All right. Take care of yourselves, gang. Peace. What the hell's happened here, man?